You indicated that we're in a gigantic bubble. Could you comment on that and explain how this is likely to roll out when money is printed on the scale that modern nations like Japan, the US, Europe, etc. are printing money? Warren Buffett says, "We're entering uncharted territory in terms of scale. Nothing has ever been quite like what we're doing right now." We know from what has happened in other countries that trying to print too much money eventually leads to terrible trouble. And while it may still be a long way off, we are closer to terrible trouble than we have previously been. When Volcker raised the primary rate to 20% after the 1970s, and the government was paying 15% on these government bonds, I sincerely hope that is the case. The conditions that allowed Volcker to do that without any interference from the politicians were extremely unusual, and I think in hindsight it was a good thing that he did it. That was a terrible recession that lasted a long time and caught us in a lot of agony. I certainly hope we don't go there again. I don't think our current leaders would be as eager to let a new Volcker handle the economy that way and start that kind of recession. I believe that the new problems will probably be distinct from the previous ones. The difficulties that come to us could be greater than what Volcker was experiencing and more difficult to cure. You might wish you had a Volcker-style recession instead of what you're going to get. As an example of what Plato claimed occurred in the early Greek city-state democracies, consider all the Latin American nations that print excessive amounts of money and end up with powerful men and other things. With a lot of equality and the principle of one person, one vote, you have populist demagogues. I don't think that was a wild thought on Plato's part. I think that accurately characterized what happened in Greece back then, and it's happened again and again in Latin America. Pretty soon you don't have your democracy anymore. We've done something very severe, and we don't know how bad the issues will be here. Whether we'll be like Japan or something much worse. Life is interesting because we don't know how things are going to turn out. At least I don't want to go there. I believe we are aware of the potential for major disaster. And I believe some of our earlier concerns were unfounded. If you have a lot of interest-bearing debts and you pay them off with checking accounts on which you're no longer paying interest, consider how seductive that is for a bunch of legislators. Japan is still existing as a civilized nation in spite of unbelievable excess by all previous standards in terms of money printing. It appears like heaven when you stop paying interest and utilize the money. But when something is that alluring, it is prone to be misused. If you stop to consider it, my way of life did not include foreseeing minute changes in the short term between the Russell Index and the Standard & Poor's Index. I don't have an opinion on which index is better at any given time. In fact, I never even consider it. Instead, I just look for investments that will allow me to feed my family while doing as well as I can against the current. If you plan to invest in stocks or real estate for the long term, there will undoubtedly be times when there is a lot of agony. I'm not trying to foretell the tides. When there is a boom in other times, I believe you just have to learn to deal with them. When there is a boom in other times, I believe you just have to learn to deal with them. Miss Kipling advised treating those two imposters equally because you must deal with both daytime and night. No, sometimes it's day and sometimes it's night. Sometimes it's a boom and sometimes it's a bust. Does that upset you too much? Buffett says, I support doing the best you can and continuing as long as they permit. What impact did passive investing have on stock valuations? Buffett says we now have a new group of emperors who control the shares and index funds. Perhaps we can suddenly install Larry Fink and the Vanguard staff as popes. I'm not sure what will happen as a result of this massive shift of voting power to these passive index funds, but it will transform the world. You can't believe what a modern factory looks like when you fill it with robots, and that's coming more and more and more. And it's coming to China too, for that matter. So those trends are inevitable, and I think it does create adjustment problems. We have a very strong economy, a very strong technical civilization, and that's not going away. And the knowledge and so forth. If you ever work in a unionized position and are replaced by a robot, you're in for a tough situation. You also have an issue if a firm like Kodak develops a new product that render yours outdated. We have a serious issue, but the easiest way for the politicians to fix it, and for the Federal Reserve too for that matter, is just to print more money and solve the immediate problem. I don't like that solution because all those problems are real, and because it's so alluring to get rid of your debt by just giving them a non-interest-bearing checking account where you used to have to pay them interest every month. Obviously, there will be certain long-term risks in doing it that way, and we already know what occurred in Germany when our republic simply kept printing money and the whole thing blew up. All of this is risky and serious, and we don't want a bunch of politicians doing whatever is simple since it contributed to the emergence of Hitler, based on the idea that since it didn't hurt us the first time, we can double it again, do it the third time, and so on. If you keep doing it, you will eventually have a totally different government. As we all know, what occurs on that everlasting doubling, so you're flirting with trouble somewhere unless there's some discipline in the process. But I don't consider Japan as being in any great danger, having given the only significant quantity of this and gotten away with it. If taxes weren't an issue, I don't think we'd be as adept at solving our issues as Japan is. In my entire adult life, I have never hoarded cash waiting for better conditions. Instead, I have simply invested in the best thing I could find. And I don't think I'm going to change now. Let me know in the comments if you have any other questions about investing. Let's return to the video. In the daily journals, the money is now depleted. Berkshire has a significant amount of cash on hand, but it isn't investing it because he doesn't believe it has the knowledge to do so. We don't have an answer for your situation. We're just getting by as I've explained, because you just can't find anything he can stomach buying. Why is Berkshire not picking up or adding any new firms to its profile, considering the value and market correction in early 2020? Buffett says, "Congratulations to the team for picking up Apple shares a few years ago. They are undoubtedly paying off. We are purchasing this because we are unable to purchase anything at the prices we are ready to pay, because of simple bidding wars between other buyers, and because private equity firms frequently purchase items that they do not intend to actually own. By managing more things, they may charge higher costs. Of all, it's far simpler to purchase anything with someone else's money. But we think of it as using our own money. Even an admirable company like Costco may reach a price where you would think that's too high. But I would argue that if I were investing money for a pension fund or sovereign wealth fund with a time horizon of 30, 40, or 50 years, I would buy Costco at the current price. The fact that Berkshire has some money left over that they aren't investing is not a disaster, in my opinion. We seem more responsible with the extra wills, and we act more responsibly with the extra wheels. The investors who are concerned about the future, as it seems, I want to remind them of what my former torch professor used to say to me. Tell me what your difficulty is, and I'll try to make it more difficult for you. He did me a favor by treating me that way, and I'm simply returning the favor to you. When you are thinking the ideas, at least you are thinking appropriately and worrying about them appropriately. Inflation is a very important issue for those of you who are concerned about it, the future of the republic and other things. You could argue that this is how democracies crumble. Inflation is a major factor in the decline of democracy in Latin America, so this poses a serious threat. Once a populace discovers that it can vote for itself with money, going overboard can seriously damage civilization. If you consider the Roman Republic, even after they transitioned to an empire with an absolute ruler, they steadily increased the value of their currency for hundreds of years, before the entire Roman Empire finally fell. As a result, it is undoubtedly the biggest long-term threat we face, second only to nuclear war. The Great Depression, followed by the Weimar inflation, which completely destroyed the middle-class Germans' savings, created a very dangerous environment, and I believe the safe consumption for an investor is that the EM currency will go to zero over the next 100 years. This is my working hypothesis. Hitler entered the picture after receiving 40% of the vote, and soon we had a despot determined to start a world war. The history is not pleasant. and Germany was a very advanced and civilized nation when Hitler took power. I always say that the interesting thing about that is that little Jewish boy Albert Einstein received his entire primary education at the request of the Catholic Church in Germany, which is a very civilized nation. If you let your country degenerate too much, you get a Hitler, as we've proven in a modern democracy, of course. You can expect a large-scale response from the government in the Keynesian era. The response this time was greater than it has ever been in American history. People just poured money at the issue. They were undoubtedly justified in being fearful of what might transpire and in being quite liberal with their spending, but they may have gone a bit beyond. I don't criticize it. It's difficult to make these decisions under pressure. However, because they put so much money at it so quickly, it's difficult for the restaurants to find workers. You should be confident in the capability of our technological civilization, but it's still intriguing to look at the last 100 years, from 1922 to 2022. Before that, things were pretty much the same for the previous thousands of years. There was no printing press, no air conditioning, no modern medicine, and so on. I don't think we're going to get things that were in what I call the real human needs. Most of modernity came in those 100 years, and in the previous 100 years, that got another big chunk of modernity. Consider what it meant to initially acquire, let's say, the steam engine. What you got in the 100 years that ended in 1922 was the steamship, the railroad, a little bit of improvement in farming, and a little bit of development in plumbing. The following century brought us widely available electricity, modern medicine, the automobile, the airplane, records, and air conditioning in the South. I consider this to be a blessing because it meant that if you wanted 3 children, you had to have 6 because 3 of them died in infancy. Imagine how our investors must have felt having to watch half of their children suffer. Amazing advances have been made in society during the past 200 years, most of it in the last 100 years. Now, the issue is that while basic requirements are generally met in the United States, the main issue with the poor is that they are excessively overweight, which is a significant change from the past. People are less satisfied with the state of affairs than they were when the conditions were much tougher, and there is a very simple explanation for why this is the case. They were on the verge of starvation. With all this enormous improvement in living standards, freedom, and the reduction of racial inequities, along with all the enormous progress that has occurred, it is really interesting. The world is not driven by greed, rather envy, and the reality that everyone is 5 times wealthier than they were 5 years ago are the driving forces. Others only consider how others have more, even though it is unfair for him to have it and they do not. For this reason, God descended and commanded Moses not to envy his neighbor's wife or even his donkey. I mean, even the ancient Jews struggled with envy, so it's part of the way things are. I was in the midst of the Great Depression when I was my age, so it's strange for someone my age. After all this amazing affluence and other things, the hardship was incredible. I felt safer wandering about Omaha at night than I did in my own neighborhood in Los Angeles, and I had no way of changing it. Everyone wants to have a pretentious expenditure, which helps drive demand in our contemporary capitalist society. But I can't change the fact that many people are very unhappy and feel very abused even after everything has improved by about 600%, because there is still someone else who has more. For example, consider the extravagant spending of the wealthy. Who the hell needs a Rolex watch so they can be robbed for it? Yet everyone wants to have an extravagant expenditure. Although I don't believe it brings much enjoyment, ostentatious spending is what fuels the culture that exists today. It fuels unhappiness. What will happen in the end? And what is your best piece of advice? Other than owning high-quality equities, what other options are there for individual investors to best manage the negative effects of inflation? Buffett says, well, it's possible that you have to select the best option from a number of options, which frequently occurs when people make decisions. The stockbrokers have shares of Berkshire Hathaway, Costco, Chinese companies, a small amount of Daily Journal stock, and a lot of apartment buildings. Do I believe that is ideal? No. Is it okay in my opinion? Yes. If you're trying to do better than average, you're lucky if you have 4 things to buy. And to ask for 20 is really asking for egg in your beer, because very few people have the intelligence to get 20 good investments. I think the greatest lesson from the Mungers is that you don't need all this damn diversification. 4 good assets are enough, and you're lucky if you have them. I agree with finance professors and the Selway idea that perfect diversification is professional investment. If you consider how much it costs to acquire a home in a desirable area of a city like Los Angeles, it will be significantly harder for them than it was for my generation. We'll likely have higher income taxes in the end, among other things. No, I don't think the last 98 years were the best time to own a diversified portfolio of common stocks that was updated a little by adding the new ones that came in, such as the Apple and the Alphabets. And I'd say that people got maybe 10 or 11% if they did that very intelligently before inflation and maybe 9% after it. No previous generation in the history of the world has ever had a return like that. And I don't believe the future will offer the college graduate this year quite as simple of a return on investment. It's going to be much harder in my opinion. While some people are gifted enough to invest in challenging things, I believe that it would be wiser for most people to have more modest goals in terms of what they choose to do. Therefore, I believe you should consider your degree of expertise or that of your advisor while making a decision. However, I would say welcome to adult life to anyone who finds the current financial climate challenging, complicated, and somewhat difficult. Hope you have learned something from this video. What are your thoughts? Comment down below. If you enjoyed this video, make sure to click the like button and also don't forget to subscribe to the channel and hit the notification bell for you to be updated on our latest videos. See you in the next video. Thanks for watching. Want to learn more and be more financially literate? Click on the next videos we have in our channel, showing on the screen right now.